if they raise the benchmark interest rate next week, presumably the big effect will be on the prime rate, and that will increase the rate for millions of variable mortgage borrowers.
Yeah, the most immediate impact, Andrew, is going to be on anyone who currently has a variable mortgage rate or a home equity line of credit. Their rate will go up right away, and then their mortgage payment will go up in February, and the minimum payment on their home equity line of credit will go up as well. So yeah, anyone in a variable rate or any type of floating rate debt, they're going to feel the effects immediately. Anyone in a fixed rate, their rate's not going to change until their next renewal. So they should look forward to whenever that next renewal date and start to budget in the higher rates that are to come.
Of course, that's the beauty of the fixed rate. You know what you're paying. But fixed rates, they're more tied to longer-term bond yields, aren't they?
Yeah, more tied to longer-term bond yields. Now, the bond yield is up to its pre-pandemic level. We're right at about where we were January 2020 before any of us had heard of COVID. So fixed rates are on the way up as well. Now, I think I'm in the minority. I'm not positive that the bank is going to move up next week. I'm more anticipating that they may hold and that they're going to tell us they're going to move up at their next announcement in March, largely because COVID persists. Economic activity is still below pre-pandemic levels. And their last announcement wasn't that long ago, which was December, when they told us that the earliest they plan on moving is April. So I'm expecting they're going to move that guidance forward to March, but I'm going to stick my neck out and be part of the minority who says that they're going to hold next week, but tell us they're going to move up quicker in March.
So you reckon the bank could well be like one of those dogs next week that barks and barks but doesn't actually intend to bite you?
That's what I'm thinking. Okay. I think that I'm expecting still 2 to 4 rate increases throughout the year, but I expect the first one. I won't be surprised if they move it up next week, but on the balance of probabilities, I'm going to say March as opposed to next week.
Now, give us a bit of perspective here, because in recent years, the variable mortgage has become a much bigger part of the market.
It has, especially this year. You know, right now we still have prime minus 1.6% available,
wow,
which is a net rate of 0.85%. It's the lowest it's ever been.
You mean with inflation?
Pardon me?
Oh, sorry, you said a negative net rate on variable mortgages?
Right now we have a variable rate at prime minus 1.6%. So prime minus 1.6, prime's at 2.45. So the net rate that a borrower pays right now is 0.85%, and that's the lowest it's ever been. And so that's been very popular through the summer, and people are looking at it and they're saying, you know what, the comparable fixed rate that I could get is about 1.5% higher. So that's 6 quarter-point rate increases by the Bank of Canada before my rate would be equal to the fixed rate that I could get today. That's why, even in the face of a rising rate environment, the variable continues to be popular. Even this week, we have people taking new variable rates now. You know, people are considering locking in, but many are saying, you know what, my strategy with this mortgage was to get the variable, stay with it for the entire 20 or 25 years. That has been the cheapest way to finance your mortgage historically. And people have saved a lot of money with the variable over the years. So they're saying, you know, I'm not going to abandon it now. So
people are getting a variable mortgage right now. People are paying only, I think you said, 0.85% a rate. 0.8,
yeah, that's the lowest available. That's for high ratio borrowers. But yeah, there's variable rates across the board that's the lowest in the country at 0.85%. So they're still so cheap. So even though everyone agrees, even variable rate holders agree that rates are going to go up this year, but many are still holding, and even new borrowers are still seriously considering the variable rate. It's not appropriate for everyone. It carries more risk. So you definitely need to be a household who can handle a little bit of fluctuation in your mortgage payment. But the quicker you're going to pay down your mortgage as well, the more a variable rate is appropriate, because your mortgage balance begins at the highest, and if you're paying it down quickly, it's less material what the rate's going to be in year 4 or 5 once rates have moved up further.
That's interesting, isn't it? Our latest inflation read in this country, 4.8%. So you're paying negative. In real terms, you're being paid to take out a mortgage, I suppose.
Yeah, it's with the inflation rate where it is, it's being able to get something at less than 1% for your mortgage rate is just it's pretty close to free money, and so it's attracting a lot of people.